Hello everybody. So today we are going to talk about US stock markets again, and I will show you a chart with the relative performance of the S&P 500 against the MSCI Emerging Market Index, which remains very weak, and we'll end with an outlook on European stock markets, which are still showing mixed charts. After that, I will make an update on euro, dollar, and gold, which are probably at turning points. And we will end with a chart of Brent. So first chart, I would like to share with you a comparison of the performance of two ETFs. The first one is EM US, which is covering emerging markets, and the second one is the S&P 500 ETF SPY US. So as you can see, there is a very strange decorrelation since a long time, with emerging markets still under pressure, and they hit new year lows in mid-August before starting a minor technical bounce, I would say. And on the other hand, we continue to see persistent strength on the S&P 500, which hit new highs this week. So this is something quite unusual. I'm still not very comfortable with this divergence because sooner or later emerging markets will have to recover, or the S&P will have to go down, but this divergence cannot last forever. So I don't have strong conviction regarding the next big move. Will it be a correction of the S&P or a recovery of the emerging markets? All I can say now is that the recovery we have seen last week on emerging markets is not really convincing. We started to see renewed weakness yesterday on emerging market currencies. So there are few evidence of a bottom on emerging market countries, and on the other hand, so the S&P 500 is still quite bullish, becoming a bit of a stretch, but it's hard to expect a major correction from here. So let's wait and see. Regarding another stock market index, so this is the chart of the Nasdaq 100. So I like on the S&P 500 a significant upside breakout last week on the Nasdaq 100. So this remains a very strong index, one of the strongest in the world, and from a technical point of view, we will need to see a break below 7,500 to have an invalidation of the recent breakout. So still bullish. Within US tech stocks, it's quite interesting to see that the FANG stocks did not hit new highs. So the last breakout we saw on the Nasdaq 100 was not driven by the big US tech stocks. So the NYSE FANG Plus index remains in the trading range and is still trading below its high of June. And we continue to see a significant underperformance of FANGs against the S&P 500. So that's something quite interesting to keep an eye on, and suggesting the possible start of a rotation within a US equity market. If we end the outlook of equity markets with Europe, as you can see, there are nothing really interesting to highlight this week. We continue to see formation of very complex trading range on most European indices. So this one is the Stoxx 600 index. So we continue to see sideways trading. You see this triangle formation. So it's still hard to have strong conviction regarding the direction of the next big move. So once again, let's wait and see regarding the next big move coming on Europe. If we now turn to euro dollar, so a quite interesting chart, a panic selling move during the first part of August with a break below an important technical support at 115, but a low seen in mid-August, followed by a V-shaped recovery and a move back above 115. So this is quite interesting because we saw that there was obviously a bear trap on euro dollar below 115, suggesting that we probably completed on euro dollar a 1, 2, 3, 4, 5 wave down, and possibly starting a multi-month recovery. So that's quite interesting what happened last week, and suggests that the euro dollar is probably starting a credible technical bounce, I would say, with a first target around 118, which is already closed, and a preferred target zone around 120. So any pullback, I would say close to the 115 area, could be seen as a buying opportunity. Regarding gold, so also a kind of V-shaped recovery since last week. It's quite interesting to see the reporting of CFTC positions. You have the commercials here, the speculators, and we can see that commercials, which are gold mines, are not hedging anymore gold on future markets. They're now turning neutral on gold futures, which shows that they don't think the recent sell-off will last, and they're not hedging anymore gold prices at current levels. And usually they are the smart players. If you see the last time they stopped hedging gold, it was in late and I would say early 2016, which was close to a market low. On the other hand, we can see that speculators, which are mostly hedge funds, were completely whipped out of the market, and they closed a long position on gold futures, and are now turning almost net short for the first time in almost 10 years. So a quite unusual situation, and suggesting that there is a risk of seeing a short squeeze, I would say, on gold prices within coming months, and possibly a V-shaped recovery. Last chart I wanted to show you is the chart of Brent. So 2 weeks ago, this technical situation was very critical on Brent, because Brent was challenging a critical support zone around 71.70, and we saw a very strong recovery on Brent. Even with Brent breaking above an important resistance at 75. So the technical outlook is still pretty strong, I would say, on Brent, especially compared to other commodities. So the risk, the possibility within coming weeks is to retest the upper part of this range around 80. At least I would say that the technical reaction we saw last week shows that Brent remains a leading commodity, and will probably, I mean, the worst case scenario will be to see further sideways trading in this range. Best case scenario, an upside breakout before the end of the year. Thank you very much, and have a good day.